menu today is the biopharmaceutical company Pfizer. The ticker symbol on the New York Stock Exchange is PFE. It costs about $29 per share. It pays 41 cents per share 4 times a year. The next ex-dividend date is the 24th of January, and it will pay that dividend on the 1st of March. Pfizer is down 7.5% in the last month. It's down 25% in the last 6 months. And over the last year, it's down 43%. Its 52-week high is $54.93, and its 52-week low is $28.30, so we're very close to the 52-week low. I started a small position in Pfizer on the 21st of June of 2021, about €10. That is now down 28%, and I've just put in an order to put another €20 in. So a quick overview on Pfizer as a company. There is a potential 5 points that Pfizer can earn in this section. So according to themselves, Pfizer is one of the world's premier biopharmaceutical companies. It was founded in 1849, which makes it 174 years old this year. So that earns it a full 1 point out of 1. As part of this new rating system, every 5 years that a company has been going earns 0.1 points for a maximum of 1. The company is based in New York City in the United States, and their business is researching, developing, manufacturing, distributing, selling, pretty much the whole cycle of biopharmaceutical products, with a particular focus on oncology. Pfizer was one of the first companies to distribute a vaccine during lockdown, so it had a boom, but it has come crashing back down to earth recently. Pfizer employs 83,000 people, which earns it another 1 point. Every 1,000 employees a company has, I'm going to give them 0.1 points for a maximum of 1. And they distribute their products in North and South America, the Asia Pacific, Australia, Europe, Africa, and the Middle East. So out of a possible 0.5 points, it earns 0.5. And for the products and services moat, I'm going to give it 0.3 points because it does have a lot of products, and the maximum amount of points it can earn in that section is 0.5. Pfizer's market cap at the moment is $163 billion, which makes it a large cap company and earns it another 1 point out of 1. And it can earn 1 more point depending on its news and analyst sentiments at the moment, which are not great because of their obesity drug that they've had to pull due to adverse side effects. On Yahoo Finance, they seem to be torn between a hold rating and a buy rating. The TradingView website says strong sell for technicals, but it's a buy according to the analyst rating. A lot of the sites I was planning on using seem to want me to subscribe to them and pay for it, which I'm not going to do, so it will be limited. This one is on Wall Street Journal. At the moment it has 11 buy ratings, 1 overweight rating, 13 hold ratings, no underweight ratings, and no sell ratings. So the overall consensus is it's slightly overweight, which means they believe it could fall more. TipRanks gives 5 buy ratings, 8 hold ratings, and no sell ratings. This was posted 3 days ago. Pfizer is being sued by Texas over COVID vaccine claims. Pfizer claimed its vaccine was 95% effective, and it offered a relative risk reduction in people who took it. And they're being sued because this was based on 2 months of clinical trial data, and the people suing them claimed that the vaccine was 0.85% effective. So we'll see how that goes. Pfizer was also developing an obesity reduction drug to be taken twice a day, but they had to pull it because of bad side effects. So the news is not good. It's not good for the company, but it is good for investors, I think, because it's going to drop the price. Out of a potential 1 point for analyst sentiment and current news, I'll give Pfizer a 0.7. So for the general overview of Pfizer, it scored 4.5 points out of 5, which is not bad at all. And then a quick look into Pfizer's financials. There's a potential 9 points to earn with an additional 0.2 bonus points. So Pfizer's current revenue is $100 billion. That's their top line, the total amount of money that comes through their business. Their profit margin over the last year is 31%. That's how much of their profits they actually keep after paying expenses. But over the last quarter, it's not a pretty sight, minus 18%. So out of a potential 1 point they can earn for profit margin, they earn 0.1 point because of how bad the last quarter looked. As a publicly traded company, they're divided into 5,646,000,000 shares. And the earnings that they reported in October of this year were pretty abysmal. The next time they'll be reporting earnings will be between the 1st and the 6th of February of next year, and hopefully it's improved. Pfizer has a current price to earnings ratio of 4.6, and the industry average for the healthcare sector is 22.5, so it is undervalued according to that metric, and therefore seems to be at a good price. In the last year, Pfizer had $197 billion in assets and $110 billion in liabilities, for a debt to assets ratio of 51%, which is very good. And in the most recent quarter, they had $215 billion in assets, $118 billion in liabilities, for a debt to assets ratio of 55%. Over the last year, their cash flow from operating is $29.3 billion, from investing is negative $15.78 billion, and from financing is negative $14.83 billion. So out of a possible 2 points for their earnings per share, price to earnings ratio, and their level of debt, they earn 1.2 points. And for my favourite part, which is the dividend, it pays 41 cents per share 4 times a year. So for paying 4 times a year, it earns 0.8 points out of a potential 1. But Pfizer doesn't seem to pay any bonus dividends, so it doesn't get the 0.2 bonus points. The current dividend yield is 5.6%, which is considered in the sweet spot, although dividend yield on its own is not a good enough indication of whether or not it's a good dividend investment. But that does earn them 1 point out of a potential 1 because it is in the 3 to 5% area. Pfizer's dividend payout ratio is 87.5%. This is pretty high. Anything between 0 and 50% is considered sustainable, so that earns Pfizer 0.2 points out of a potential 1. Pfizer's 5-year dividend growth rate is 4.6%, which earns it 1 point out of 1. Pfizer has increased their dividend every year for the last 13 years. That earns them 0.3 points out of a potential 1. They have paid a dividend every quarter since 1938, which means they've paid 85 consecutive years of dividends, and that earns them 1 point out of a potential 1.5. Now, this is my first time using this point scoring method, so it might be a little bit inaccurate for the first couple of videos, but I would like to develop a system to rate all the stocks that I have. So it's a learning process, and also it will help me to kind of put all the information into a more kind of concise and structured way of presenting it, rather than what I was doing before. But out of a potential 14.7 points, which includes the 0.2 bonus points, Pfizer scored a 10.1 because it is a great company, it's just having a pretty hard time at the moment. Its dividends are dependable, it has been paying them for a long time, but at the way things are looking, it could fall a little bit before it bounces back. So overall, do I think Pfizer is a buy at the moment?
Yes.
So that's it for this one, and let me know what you think about the new system, anything I can add to it, take out of it, or change at all, and that's it.